Hello, everybody, and welcome back to another episode of the Rogue Agent Answers. My name is the Rogue Agent. Some people call me David Lewis, and every week I answer one of the many life insurance related questions that I've received from clients, from email subscribers on the daily email list. Questions floated to me from across the interwebs in the comments sections, which I know you're not supposed to read, or just interactions that I've had with people in real life over the past 20 years, which is a long time. And some of these questions I just scribble down on scrap pieces of paper. Some of these are stuff I've written down on my phone. Some of it is on Post-it notes scattered all over the office. And every week I answer one of those questions. So if you'd like to ask your question, drop them in the comments section or join my email list for more life insurance tips and advice at monogenics.com. monegenics.com. Also, keep in mind that nothing in this podcast is or should be construed as financial, investment, legal, or tax advice. In fact, nothing that I say in this podcast should be construed even as insurance advice, as I don't give individual advice blanket just across the internet, unqualified, to random strangers. So if you need any of that stuff, contact a licensed professional that you know, like, and trust, preferably someone licensed in your jurisdiction. And now for this week's question. Why don't you ever recommend universal life insurance? I think I've answered, maybe I answered it about indexed universal life, but I'll go ahead and answer this one anyway. So I wouldn't say I never recommend it. Or recommend changing it or replacing it or whatnot. I haven't sold a universal life policy in a very long time. The reason is because the product is riskier than other products that are guaranteed to get the job done. And I decided a long time ago it's simply not worth the risk to me and also to the policyholder, but not worth the risk to me to sell the product to someone else. I don't own universal life insurance. And there's probably instances where it might make sense. I could envision those instances. My clientele, it doesn't make a lot of sense, the people who come to me for life insurance advice. Very rarely have I ever seen it make sense. I do have clients that own UL policies and they're fine and they work well in those specific contexts. But for most of the people who seek out my advice about life insurance, they don't want universal life. And then looking at their financial situation, it's not suitable for them. And also just doesn't make sense in the context of what they're trying to do. But just in general, the universal life is a higher risk product than a guaranteed whole life product. Well, actually both term and whole life. And those risks usually manifest themselves in unexpected and unpredictable ways. So when I first got into this business, I started at MetLife, which ironically now doesn't sell individual life insurance anymore, but back then they did. And I have to say that because at some point somebody's going to say, one of the young bucks is going to listen to this at some point in the distant future and say, MetLife doesn't sell life insurance. You could have done that. This was back in 2004. They sold life insurance. I assure you. So that's where I started. And one of my jobs at the company was basically combing through these old books of business, literally filing cabinets with drawers, not computer files. I'm talking like filing cabinets that took up physical space in a room that you had to open with your hands, and had folders, paper in them, and combing through these books of old business that MetLife had sold. And servicing all of the orphaned clients for MetLife in that office. So most of the people had universal life policies from the 1980s and 1990s. Nearly all of them, again, this was back in 2004. Nearly all of them had problems. I think I only reviewed maybe a handful that did not have any problems. So many of them had to be replaced. Some could be fixed. You could, on ULs, you can lower the death benefit, and sometimes that fixed the problem. A lot of times the policyholder had to increase their premium dramatically, and they didn't want to. Either they didn't want to do that, or they couldn't afford to do that. So a few of them could be saved, but most of them needed to be replaced. So what I saw personally over and over and over again as the result of these policies at the 10 and 20 year mark. Now, I mean, as of this recording, say 2004, 24, it says more than about 22 years. I still see this basically the same problems. I mean, the same basic problems in the UL chassis, whether it's current assumption ULs, which don't really exist. I mean, some of them exist in a limited way. VUL products, which I don't see a lot of, but I do occasionally see those. And an indexed universal life, which is everywhere. I see the same problems, same exact problems that were there 20 years ago are still there. Oftentimes the policies are set to lapse under the current assumed crediting rates, under the guaranteed crediting rates, I should say. The assumed crediting rates on IULs don't ever, or I would say never, but they hardly ever lapse. I don't think I've seen one lapse under the current assumed rates because the crediting rates are so high. The illustrated rates are so high, but on the guaranteed rates they always lapse. It's just, you see that you look at illustrations. It's just baffling why you look at that and you don't see that in guaranteed products. Or the policy's underperforming in some other way. If you look at in-force policies, it's not unusual to see them underperform. So some agents have gone back and said, over the last 5 or 10 years, IUL has performed really, really well. Yeah, in the golden age of IUL, the crediting rates were fairly good. But then you look at the first IULs that were sold, and I could tell you just from firsthand knowledge, the old Ameris, Aviva policies, which, granted, nobody's heard of them now, but at one time Aviva was the major seller of IUL in the United States. Those policies are now stapled down to the guaranteed 2%. Now, the rebuttals that I get from insurance agents, are, Ameris was not, Aviva's not a great company. They weren't that great. And blah, blah. I would have never sold those policies, blah, blah, blah. To that, I say BS because they were the major seller. You had a couple others, but they were the major seller of IUL back in the day. And a lot of agents sold them because of that. They got really big and they sold a lot of policies, made a lot of money, and lots of people made a lot of money. The insurance companies made money and the agents made money, and as they say, 2 out of 3 ain't bad. So, in a few cases, the policy is unable to perform the way it was originally illustrated because the carrier changed cap rates or expense loads. I've seen that. Very common. And when I explain when I talk to somebody who has an IUL or any kind of UL really, when I explain how their existing UL policies work, the policyholder nearly always tells me how either the agent explained it to them differently, meaning inaccurately, or they don't like the risks and the uncertainty of their policy after having owned it for a number of years. Those are the two responses that I get. In a few cases, a quote-unquote broken UL can be fixed. ULs aren't I wouldn't say broken, they're not broken, but it's not performing the way that the policyholder wanted to. In many cases, it makes sense to exchange it for a whole life policy because ultimately, when you explain how the thing works, the policyholder ends up saying, "Well, I don't like this, and I don't like that, and I don't want this. And why can't I do that? And I don't want to worry about this thing. Why can't I just get something where I can just pay the premiums and not worry about it?" Yeah, you can. It's called whole life insurance. So there's one potential exception to UL policies, and if I ever come across a UL that can be set up to function as a whole life policy under the guaranteed assumptions, I might consider selling it. Worst case scenario for a cash value policy is you should get all your money back plus a little bit of interest. And yet every single UL policy I've ever seen, the policy lapses under those guaranteed assumptions. Now, a lot of people will say that are pro UL will say, don't worry about it. I don't worry about the guarantees because those are not really realistic. You don't ever worry about the guarantees in a whole life policy. Why would you worry about the guarantees in a UL policy? And it's true. I don't worry about the guarantees in a whole life product. I don't expect them to materialize, but occasionally they do. And that's the whole point of insurance, is that you are planning for the worst and then hoping for the best. In a universal life, you're doing the exact opposite. you are planning for the best, or at least an optimal scenario, and then you're hoping that comes true. And if it doesn't come true, the worst case scenario is far worse than what you're actually planning for. It's, in my heretical opinion, I guess, is that's backwards. That's not how you do real risk planning or insurance planning. That's more the way that you might think about investing or speculating, but applied to insurance. So you're kind of taking this mindset of speculation and then trying to apply it to a financial hedge, which is what insurance is. And life insurance is all about hedging risk. You're trying to mitigate, reduce risk by transferring it away from you and onto an insurance company, because there's some kind of uncertainty in life, and like it or lump it, that's the way it is. Life is uncertain, right? It's filled to the brim with uncertainty. And life insurance takes financial risk off the table, or it transfers it away from you, so that you can exchange a lot of uncertainty for a fixed premium. And then as long as you pay that premium, there's a bunch of uncertainty that you don't have to worry about anymore. And so you can take maybe you want to take more financial risks somewhere. You can afford to take certain risks that you otherwise wouldn't really want to take. Or you can just sit on it, and maybe you just feel better not taking that risk, and you have much lower stress levels. There's other benefits that you get from that besides numbers on a spreadsheet. Some people, like their constitution, they handle ups and downs, the swings of the financial markets very well, or they just don't think about it. So they kind of, evade or ignore, the fact that they're losing money, and in the hopes that the money comes back and that they make their money back if it's in equities or whatnot. And if they can just ride it out, they'd probably be okay. But, in the meantime, they're under a lot of stress. And, what are the health implications of that? And how does that negatively affect the rest of your life? So, stress levels raises cortisol, which then causes other downstream effects. And maybe you end up with other problems that have nothing at all to do with money. Well, maybe it would connect to money if you stress yourself out to enough, about money. Eventually it comes with a price tag. But, sometimes things are not directly related to numbers on a spreadsheet, but are nonetheless still very important. So for some people, they just want to take as much risk off the table as they can. Or maybe they want the option to take risk off the table during certain periods of time where they don't want to think about losing money in something. Then the life insurance is what enables them to get through certain times, certain periods in their life where they want, or maybe they need, a low stress option to exist, to exist, for the place to put their money. And then there's periods of time where you're ready to take risks, where it's like, all right, risk on, I'm ready. And then you take it. So it's not as simple as, the guys who sell, or guys who promote this idea that all you need to do is buy low cost index funds. And that's all you need to do. There are people out there that are like that, and they'll just promote that idea to the end of times. And they think that that's all you need to do. The reality is that I think you need to put a little bit more thought into what it is that you're doing with your financial planning, with your money. There are periods of time when, risk on makes a lot of sense. And then there's periods of time where you want risk off. And if you're under a lot of financial stress, adding more financial stress by tying up capital, and maybe you don't want it tied up or can't really afford to take those risks, it's nice to have an option, is what I'm saying. So anyway, when it comes to life insurance, at least, again, in my heretical opinion, the point of life insurance is to be a hedge against worst case scenarios, or, planning for the worst, I guess is what I would say. So it makes more sense to me to use life insurance that way than as a way to speculate or make money, or use, I guess, unhedged investment strategies like sub-accounts or mutual funds, like try to invest in equities, or use crediting strategies that can bounce around and not give you any kind of certainty about future values. That's my opinion. A lot of agents and investment advisors, they have very different opinions about how to do life insurance planning. This is my own personal view. So that's my reasoning for not wanting to promote a lot of different kinds of UL policies. Guaranteed UL is maybe an exception to this. Guaranteed UL is essentially a permanent term product. There might be situations where a guaranteed UL makes a lot of sense. If somebody wants to buy a UL policy and all they want is death benefit and they don't really care about cash value and they also want a lower premium, guaranteed UL could theoretically make sense. Depending on, there is some risk involved in a guaranteed UL, just in the, not policy risk necessarily, but maybe administrative risk, just because of how premiums have to be paid. You can't pay them late at all. You can't pay them early, and you can't pay them late. So premium timing sometimes can create a problem if it's not done, if you don't pay your premiums exactly the way you're supposed to. But if it's policy risk, as long as you pay the no lapse guarantee premium, you'll be fine in those. Most carriers are, I think most carriers are maybe being a little bit more responsible with their GULs these days. But there was a time period when they just kind of went nuts on the pricing and maybe created some risks for the company because of how low the premiums have gotten and the assumptions that were baked into some of the products. So, but as a product, for the policyholder, I think it could potentially be a valuable addition to a financial plan. Term insurance, especially if it's convertible term insurance, is I would say almost always, maybe there is instances where it's not, but almost always a valuable addition to a financial plan. If the qualifier, the individual has something worth protecting, income, assets worth protecting, they have a family, or they have heirs that they would want to leave the money to. And then whole life insurance, of course, is valuable if you have if you have assets that you're trying to protect, you have income and assets you're trying to protect, and you have income to pay the substantial premiums that of course are associated with whole life insurance. So that's my take on it, and I guess that's all I have to say about that. But yeah, I think every once in a while I'll get a question about ULs and why don't I do more with universal life, and I think it has a lot to do with my view about risk and financial risk and how to plan around that, and I guess how you're supposed to hedge financial risk, and I guess maybe it gets back to the fundamental reason or purpose for life insurance and why it exists. But that's my take on it. I hope that answers the question, and I will see you in the next one.
Okay, that's it for this week's question. If you'd like to add your question to the list, just drop them in the comment section or send me an email. And if you want more life insurance tips and advice, just head on over to monogenics.com, MONEGENIX.com, and sign up for my daily email list.